Hi everyone. Today we're going to talk about the massive impact of the Iran war on the global energy market. After the conflict broke out, crude oil prices shot up from $65 per barrel to over $110, a surge far bigger than what we saw during the Russia-Ukraine war, and it sent the world scrambling. The key reason is the Strait of Hormuz, a narrow channel connecting the Persian Gulf to the Arabian Sea, which is the lifeline for global oil and land transport. About 20 million barrels of oil and 20% of global LNG pass through here daily. If this strait is blocked, major economies in Asia like China, India, Japan, and South Korea would face severe energy shortages. Iran, using its geographic advantage, can threaten shipping with mines, drones, and missiles. Even with the U.S. military presence in the region, this risk remains real. The rising threat increases shipping insurance costs and causes delays, which directly pushes up global energy prices. For the U.S., volatile oil prices are a major vulnerability. High oil costs drive inflation, affect consumer confidence, and even make the Federal Reserve more cautious in interest rate decisions, while impacting national debt management. Oil markets are global, but natural gas markets are more regional. This crisis has limited impact on U.S. gas prices, but hits Europe and Asia much harder. At first, gold rose as a safe haven asset, but later fell, mainly because markets expect the Federal Reserve to either raise interest rates or halt cuts to fight inflation, which strengthens the U.S. dollar. Looking at the long term, even with the global push toward clean energy, oil and gas are expected to remain dominant in global consumption until at least 2050. Future competition will shift from oil to critical minerals like lithium, cobalt, and nickel, which are essential for renewable energy technologies. Back to the Strait of Hormuz, its importance lies not only in the daily volume of oil and gas it carries, but also in the fact that it's a critical node in the global energy supply chain. Any conflict or blockade here can instantly trigger global market panic. This uncertainty has forced countries to think more about energy security, increase strategic reserves, and find alternative routes such as pipelines or non-traditional shipping paths, though these come with higher costs and lower efficiency. The war also affects the psychology of companies and investors. Crude oil futures have seen wild swings, companies face supply chain interruptions and rising costs, and investors are more cautious, which ripples through stocks, bonds, and commodities. In short, the Iran war has created not just short-term price shocks, but also long-term strategic considerations. Oil price surges, the strategic importance of the Strait of Hormuz, movements in the U.S. dollar and gold, regional differences in natural gas markets, and the future competition over critical minerals all paint a complex and sensitive picture of the global energy landscape. For ordinary consumers, high oil prices mean higher gas and living costs. For businesses, energy cost increases affect product prices and profit margins. For governments and central banks, it means balancing economic stability, controlling inflation, and ensuring energy supply. Over the next few years, the global energy market will continue to be influenced by geopolitical conflicts, technological advances, and climate policies. Clean energy will gradually replace fossil fuels, but oil and gas will remain indispensable in the short term, while critical minerals will become strategically important. Overall, the Iran war is more than a regional conflict. It reveals the fragility of global energy supply and reminds us of the intricate link between energy security, economic policy, and geopolitics.